There is a number sitting inside the Social Security Administration system right now with your name on it, not a future benefit, not a projected estimate, an actual dollar amount that has already been calculated, already been set aside, and is already owed to you. And the reason you have not received it yet has nothing to do with whether you qualify. It has everything to do with whether you know to ask for it. If you were born before 1965, there is a very specific window of people this law was designed to protect, and the majority of them, the absolute majority, have no idea this law even passed. They are still waking up every single month, checking their Social Security deposit, seeing the same number they have always seen, and assuming that number is correct. It is not. For millions of people born before 1965, that number has been wrong for decades. Quietly wrong, systematically wrong. Wrong in a way that was entirely legal because two rules buried inside the Social Security Code made it legal. Those two rules are now gone. They were eliminated permanently in January 2025, and the moment they were eliminated, the federal government became legally obligated to pay back every single dollar it had been withholding. The back payments are real. The average lump sum check is $6,710. Some people are owed more than $22,100. And SSA is not calling. SSA is not sending letters. SSA is not knocking on your door to hand you a check. The money sits in a federal processing queue until you take action or until you stop checking. I am going to make sure you do not stop checking. Today I'm going to walk you through everything, what these two rules were, who they targeted, how long this has been going on, exactly how much money is owed, and the precise three-step process that determines whether that money gets deposited into your account this month or disappears into a bureaucratic backlog that nobody at the SSA is going to flag for you. Stay until the very end because the third step is the one that almost nobody knows about. It is the step specifically for widows and widowers, and skipping it means forfeiting the entire back payment, not part of it, all of it. If you are not subscribed yet, do that right now and turn on the notification bell. Social Security rules, payment amounts, and eligibility criteria change every single year. When they change, the government does not call you. They do not send an explanation. They update a regulation buried in a federal register and move on. What this channel does is take those changes and translate them into plain language that tells you exactly what it means for your specific situation, your benefit, your household, your retirement. Subscribe now and let's get into what they have been withholding and how you get it back. For 43 years, the Social Security Administration was legally permitted to reduce or completely eliminate benefits for millions of Americans using two separate rules. Two rules that were never explained at the dinner table, two rules that were never covered in retirement planning seminars, two rules that were mentioned nowhere in the paperwork most people received when they first signed up for their benefits. People showed up to claim what they had spent decades earning and walked away with a number that was hundreds of dollars smaller than it should have been. Some walked away with nothing at all, and the Social Security Administration was not doing anything illegal. They were following the code exactly as Congress had written it. That is what made this so devastating and so difficult to fight for so long. The first rule was called the windfall elimination provision. The name itself is important to understand because the name was used to justify the rule's existence. The argument Congress made when they created it in 1983 was that certain workers were receiving a windfall, an unfair bonus, by collecting both a government pension and a full Social Security benefit. The logic was that Social Security's benefit formula is designed to replace a higher percentage of income for lower-wage workers. If you spent most of your career in a government job that did not pay into Social Security and then worked a few years in a job that did, the Social Security formula would look at those few years of Social Security earnings, see a low average, and treat you like a low-income worker who needed more protection. Congress called that a windfall and decided to fix it by cutting the benefit. Here is what they actually did in practice. If you worked as a public school teacher in California, or a firefighter in Illinois, or a state employee in Texas, and your government employer ran its own pension system that did not withhold Social Security taxes from your paycheck, and at some other point in your working life, you also held jobs that did pay into Social Security, the WEP formula went to work on your Social Security check. It did not eliminate it outright. What it did was apply a modified benefit calculation that treated every dollar of your Social Security earnings as worth significantly less than it actually was. The more years you spent in that non-covered government job, the deeper the cut. The average monthly reduction under the windfall elimination provision was $480 every single month. Some people lost as much as $587 a month, and here is the part that never gets said loudly enough. That reduction was permanent. It did not shrink over time. It did not adjust back when you reached a certain age. Every month for the rest of their retirement, 3.2 million Americans collected hundreds of dollars less than they had rightfully earned. That is not a rounding error. That is not a technicality. Over a 20-year retirement, a $480 monthly reduction is more than $115,000 in lifetime benefits quietly erased from someone's retirement. The second rule was called the government pension offset. If the windfall elimination provision was harsh, the government pension offset was devastating, and the people it targeted were not even the workers themselves. It went after their spouses, it went after their widows, it went after the people whose husband or wife had spent a career paying into Social Security, building a record, earning a survivor benefit that was supposed to kick in and protect their family if something happened to them. Here is how the GPO worked. If you were entitled to a spousal benefit or a survivor benefit based on your husband or wife's Social Security record, and you also received a government pension from a job that did not pay into Social Security, the government pension offset reduced your spousal or survivor benefit by 2/3 of your pension amount. 2/3. That fraction does not sound catastrophic until you run the actual numbers. Say your government pension was $1,500 a month. 2/3 of $1,500 is $1,000. The GPO subtracted $1,000 from whatever spousal or survivor benefit you were entitled to. If that benefit was $900, the subtraction did not just reduce it, it eliminated it completely. You received zero from your spouse's Social Security record, zero from the system your husband or wife paid into for their entire working life. Zero. Even though that system was specifically designed with survivor protections to make sure the people they left behind would be taken care of. 800,000 widows and widowers in this country lost their entire survivor benefit this way. Not a reduced benefit, not a smaller check, nothing. And many of them did not find out until they were sitting in an SSA office, already grieving, already trying to figure out how they were going to manage financially without their spouse, and an agent handed them paperwork that said their benefit was zero, because of 2/3 of a pension they had earned decades ago doing a job that served the public. Now consider the scale of what was happening here and how long it continued. Over a 40-year period, members of Congress introduced 300 separate bills to repeal these two rules. Both parties, 300 bills, teachers' unions organized, firefighter associations testified, federal employee organizations sent thousands of letters, showed up at hearings, met with staff in congressional offices year after year, session after session, explaining in detail who was being hurt and by how much. Not one bill passed. For 4 decades, the same 3.2 million Americans kept having their benefits cut. The same 800,000 widows kept receiving nothing from their spouse's record. And every year, without exception, Congress moved on to other business until January 5th, 2025. The Social Security Fairness Act was signed into law on January 5, 2025. Both the windfall elimination provision and the government pension offset were eliminated. Not reduced, not phased out over a 10-year window, not replaced with a slightly softer version of the same formula. Eliminated, permanently effective immediately, and the law was made retroactive to January of 2024. That is the part that created the back payments you are hearing about, because the law reached back 12 full months. Every single person who had been subject to WEP or GPO reductions during 2024 was owed the difference between what they actually received and what they should have received under the corrected calculation. That difference, paid as a single lump sum direct deposit, is what produced the average back payment of $6,710. For people whose entire survivor benefit had been eliminated by the government pension offset, the math produces dramatically larger numbers. A survivor benefit of $1,840 a month that was completely wiped out by GPO represents a back payment of more than $22,100 covering January 2024 forward, plus that full benefit reinstated and deposited every single month going forward for the rest of their life. The total value of all corrections owed under this law is $196 billion over the next 10 years. That number came directly from the Congressional Budget Office. $196 billion in benefits that belong to people who earned them, sitting in the Social Security system right now, being processed in batches, released on a schedule the SSA has never publicly explained, and reaching some people while quietly not reaching others. And that is the part that nobody is talking about loudly enough. Not everyone has received their correction. SSA has over 4 million individual account adjustments to process. They are working through them in groups. When your case ends up at the back of a processing batch, it waits. Days stretch into weeks. Weeks stretch into months. While you wait, you keep receiving the old reduced deposit. No letter arrives explaining the delay. No notification shows up in your My Social Security account flagging the issue. No agent calls to tell you your case is still pending. The SSA Inspector General raised this as a significant concern in 2025 reporting. What that means in plain language is that a substantial number of people have not received their full correction and have absolutely no way of knowing it because the system is not telling them. There are people right now in 2026 whose monthly benefit has still not been adjusted upward from the pre-law amount. There are people who received the one-time retroactive lump sum but whose ongoing monthly deposit is still being calculated on the old WEP-reduced formula. There are people who qualified for corrections under both WEP and GPO but only had one of the two corrections applied to their account. The second correction is sitting in a queue with no flag, no alert, and no follow-up from the agency. The corrections that are not challenged stay uncorrected. The money that is not claimed does not accumulate interest. It does not roll forward. It does not increase in value while it waits. It simply sits there in a federal processing system assigned to your account in theory, released to your bank account only if you push for it. There are 4 specific groups of people this law directly affects. Listen carefully for yours because the category you fall into determines exactly what action you need to take and how urgent that action is. The first group is public school teachers, particularly those who taught in Alaska, California, Colorado, Connecticut, Georgia, Illinois, Kentucky, Louisiana, Maine, Massachusetts, Missouri, Nevada, Ohio, Rhode Island, or Texas. If you spent your teaching career in one of those states, your school district almost certainly did not withhold Social Security taxes from your paycheck. If you also worked other jobs at any point in your life where you did pay into Social Security, the windfall elimination provision was reducing your benefit. That reduction is now gone and a back payment is owed. The second group is firefighters, police officers, and state or local government employees working in those same states. Same structure, same logic. Government employer that ran its own pension system, no Social Security withholding, but Social Security covered through other employment at some point in your career. If that describes you, WEP was cutting your check and the correction belongs to you. The third group is federal employees hired before January 1st, 1984, who were enrolled in the Civil Service Retirement System. CSRS, not FERS, which was the newer system that did include Social Security coverage. CSRS employees had their own pension system, and many of them also worked Social Security covered jobs at some point. If you are not certain which retirement system you were under, look through your old federal benefits paperwork or call your former agency's HR office and ask them directly. This is not a detail to guess at because the answer determines whether the law applies to your situation. The fourth group is widows and widowers. If you are receiving or should be receiving a spousal or survivor benefit based on your husband or wife's Social Security record and you also receive a government pension from a non-covered job, the government pension offset was reducing or eliminating your benefit. 800,000 people in this group lost everything. If you are one of them, your situation requires a different and more urgent level of action than the other 3 groups, and I'm going to explain exactly why in a moment. Here is exactly what to do. 3 steps that determine whether the money moves from the federal system into your account. Step 1 is to go to ssa.gov and log in to your My Social Security account. If you do not already have one, create it. You will need your Social Security number and a valid email address, and the process takes approximately 10 minutes. Once you are logged in, pull up your benefit statement and look at your current monthly benefit amount. Then look specifically for any line that references WEP or GPO. If you see a reduction listed there and your monthly benefit amount has not increased since January 2025, your correction has not been applied. Your case is still sitting in the processing queue and it is not moving on its own. Step 2 is to call the Social Security Administration directly. The number is 1-800-77-21213. When an agent answers, use these exact words: I want to verify whether my account has been fully corrected under the Social Security Fairness Act for WEP or GPO. Write that sentence down before you pick up the phone. That specific language tells the agent exactly which system to access and which correction history to pull up. They will tell you immediately whether your case is closed, pending, or has not yet been assigned to a processor. If your case is pending, ask for the expected processing date and ask them to note in your file that you called to follow up. That note matters because it creates a documented record of contact that can support any future escalation. If the agent tells you the case is closed but you believe your monthly amount is still wrong, do not accept that answer and hang up. Say these exact words: I would like to file a formal request for reconsideration. That phrase does not trigger a standard callback. It triggers a supervisor-level review of your entire correction record. That is a meaningfully different level of attention, and it is your right to request it. Step 3 is specifically for widows and widowers, and this step is the one that determines whether you receive the full back payment you are owed or whether you receive nothing at all. If your survivor benefit was not just reduced by GPO but eliminated completely, you cannot assume the correction happened automatically when the law was signed. The reason is technical but critical. When GPO wiped out a survivor benefit entirely, the Social Security Administration did not reduce an existing approved claim. It denied the claim outright. The system has no approved application to reverse. It cannot go back and correct something it never approved in the first place, which means in many cases the only way to receive the reinstated benefit and the full retroactive back payment is to file a completely new survivor benefit application under the Social Security Fairness Act. When you call SSA, ask this exact question: does my case require a new survivor benefit application under the Social Security Fairness Act? That single question is the difference between collecting what you are owed and watching the money expire in a system that will never voluntarily tell you it is sitting there. The federal government withheld money from 3.2 million Americans for 43 years using two rules that most of those people never knew existed. The rules are gone now. The law is signed. The back payments are real. The average check is $6,710. Some people are owed more than $22,100. And SSA is not calling. SSA is not sending letters. SSA is not flagging your account to tell you your correction is pending. The only way this money moves from the federal processing system into your bank account is if you take the 3 steps I just walked you through. Log in and check your statement. Call and use the exact language that triggers the right review. And if you are a widow or widower, ask specifically whether you need to file a new application. Send this to one person you love who was born before 1965 and is collecting Social Security right now. 1 share. That is all it takes. Because the person you send this to might be one of the 800,000 widows who lost their entire survivor benefit and has no idea that money is sitting in the system waiting for them to claim it. They have been waiting 43 years. They should not have to wait another day because nobody told them the rules changed. That is what this channel is here to do. I will see you in the next one.